If you've been told your income is too high to contribute to a Roth IRA, stay tuned and we're going to dispel that myth. As always, WealthPoint Financial Planning and Commonwealth Financial Network do not provide tax or legal advice. These videos, however, are part of my ongoing effort to help you understand what your options are so you can make good financial decisions when it comes to your personal wealth, your family, and enjoying a successful retirement. Remember, a Roth IRA may not be for everyone because individual circumstances are going to vary by individual. However, I do think there are compelling advantages to integrate a Roth as a part of your retirement income planning process. Number one, tax-free withdrawals. And this by far is the most beneficial reason to open and have a Roth account. The monies that you put into the Roth, you do not get a current tax deduction on that. However, later in life, when you go to take those funds out, the money that's in there and all the earnings will not be subject to taxes. Number two, flexibility and accessibility. So remember, you funded that Roth IRA with after-tax dollars. So later in life, if you go through unfortunate circumstances or have an emergency, you can withdraw the funds that you put in, not the earnings, without income taxes. Number three, no required minimum distribution. So traditional IRAs, at a certain age, you're required to begin to take funds out. So the current age is 73 and scheduled to go up to 75. So when you hit those ages, you have to take a distribution whether you want it or not, and that may push you up into another tax bracket. The Roth, however, does not have that requirement. Number four is tax diversification. So later on in life, when you're creating your retirement income, you're going to have a bucket of money that you can draw on that's not going to have any tax consequences. So if you're trying to stay under a certain bracket, you could pull some money out of your taxable accounts and then pull some money out of the Roth to get you where you need to go without increasing your overall tax liability. And number five, there's no income restrictions. So as I alluded to at the beginning of this presentation, is that regardless of your income, you can make contributions to a Roth 401k plan from your employer. And if you're self-employed, you have access to one as well. This is a great way to set aside funds and pretty high contribution levels if you think about what you can put into a 401k that will not have tax liability later in life.